Welcome everyone. Thank you very much for joining me here on IPO Market Watch. My name is Mike, and pretty much good morning or good evening, or I don't know what, wherever you are, whatever time you are watching this video. At the time of recording this video, it is 8:43 a.m. Eastern time. Right now, 8:43 in the morning, New York Eastern time. And CPI data just came out, so it wasn't bad at all, in line with expectations, so not bad. With that being said, I would not fear investing in the stock market if I were going with a good strategy overall. Obviously, value, these things, just like Warren Buffett said, whether the market is up or down, you can still basically invest in the stock market, guys, and still do well. I'll give you examples, and in this video, I will talk to you about a stock that's undervalued in my opinion. It is turning around, and I think, in my personal opinion, that the current price that it has is cheap, and yeah, there's upside. There's a lot of upside. We have, and it will benefit from the Thanksgiving. It will benefit from Black Friday. It will benefit from Christmas. It will benefit from New Year's. Now, before we get to that stock, guys, check this out. Uber relies on Oracle Cloud infrastructure to support over 1 million trips per hour, which is insane, and accelerate innovation. Who are they relying on? Who are they migrating their big data and the AI infrastructure, guys? On Oracle, right? So Oracle. Again, other news for Oracle is that Oracle's Larry Ellison sees $100 billion AI boom powered by nuclear energy, which, by the way, the CEO of Oracle announced that they are planning and working on an AI data center that will be powered by small modular nuclear reactors. And if you've been following this YouTube channel since 2020, I have made 3 or 4 videos on small nuclear modular reactors and stocks, etc. One of them is up over 200-300% already. So why am I mentioning Oracle even though Oracle is not the stock that I want to talk to you about in this video? Well, because the news are great, plus it's at 155 bucks. I think Oracle is going to be one of the biggest giants in the AI hyperscale sector. And if you were following my YouTube channel, you know that I talked about Oracle at $68.71 and called it a buy. Also, before I get to the stock that I want to talk to you about, guys, CLCO limit buy went through at 11.07. 11 bucks and 7 cents on August 29. I sold it at $11.70 on September 3, 2024, because they are going to have anyways a dividend on September 16 that they're going to pay out a pretty good dividend to the investors. And now CLCO is at $10.80, so it has fallen way lower than what I had bought it initially, as expected, since the dividend's coming up. I believe that I'll be able to do a round 2 swing trade on CLCO soon enough. As soon as that dividend is paid, stock goes slightly down, get back in my opinion, for me personally speaking. And guys, going around 2 swing trade. All right, so let's go to the stock that I do want to focus on, the stock that is turning around, the stock that has a new CEO, the stock that is making really good improvements on the balance sheet. All right, the stock is Gap, guys. The Gap Incorporation, GAP is the ticker symbol, is trading at $19.42. Is this the lowest price it will be going forward? Probably not. Probably not. Maybe 19 bucks, maybe 18.50. Gap Incorporation, guys, operates as an apparel retail company. The company offers apparel, accessories, and personal care products for men, women, and children under the brands Old Navy, Banana Republic. So some things that I like about Gap, guys, I think they're poised for growth with their new leadership, the new strategic changes that the new leadership has brought, building on cost initiatives from 2022-2023 to drive more sales and earnings growth. Now, all that sounds nice. I believe they're going to do this, I believe that, and I believe that. But it's better if we actually see proof of it, and I will show you proof of this in this video. The most important thing that Gap did was to hire a new CEO, Richard Dixon, who is actually really good. He has revitalized the brand with a focus on brand image, the cultural relevance, which Gap has always had, right? It's a historic brand, and cost inventory efficiency, which is very important, obviously, to reflect on the balance sheet. Some of the latest news, if you were to Google, would be Gap Incorporation was careering towards retail irrelevance. Then it hired Barbie brand's savior, the new CEO Richard Dixon. Inside the great Gap grow up, and Old Navy's brand revival delivers 90s nostalgia with a modern twist. Q2 non-GAAP EPS was 54 cents and they beat by 13 cents. Revenue was $3.7 billion, up 4.8% year over year, and they beat by 90 million. During the most recent earnings report, the CEO said the following: Gap Incorporation delivered successful quarter exceeding financial expectations and gaining market share for the 6th consecutive quarter. Adding that in comparison to where the company was only a year ago, we are in a stronger position across key metrics that matter. As a result of strong Q2 results, Gap is reaffirming their forward-year 24 sales guidance to be up slightly from the $14.9 billion in forward-year 23 and increasing its gross margin outlook to expand by 200 basis points to 40.8% from initial guidance of 150 basis points. Something else that I've noticed in the earnings report was that the balance sheet, cash and cash equivalents and short-term investments increased, guys, 59%. to $2.1 billion. An increase of 59% is pretty good. So looking at the 2024 second quarter highlights, they gained market share for 6 consecutive quarters, delivered net sales of $3.7 billion, which was up 5% year over year. They expanded their gross margin by 500 basis points, operating margin of 7.9%, and they raised their fiscal 2024 gross margin and operating income outlook. This is incredible, obviously. Like I said, I'll say it again because it's just worth looking at. Cash and cash equivalents and short-term investments, $2.1 billion, up 59% versus last year. And right here, guys, you can look at the fiscal 2024 full year and third quarter outlook, which generally is very well. And if you want, you can pause the video to check it out in further detail. But the board of directors also approved a 15-cent dividend, so that's not bad. Overall, if we look at the past 4 or 5 years of revenue for Gap, it's been pretty consistent. The gross profit slightly on the rise. Net income, not bad, ending last year with $767 million. Pretty awesome. Free cash flow growing at $1.18 billion positive. The total debt is going down, so that's a positive. Total liability is going down. Short-term investments going up. And that's it really, guys. I'm not really going to go into any more further details for Gap. I think that if you are interested in this stock, that's something, you'll have to do your own due diligence. Don't base it on my video. Don't trade according to my video. Don't buy the stock because of my video. But, do your own due diligence. And when, let us know in the comment section below what you think about this stock. Personally speaking, for me, I can't predict the bottom of where Gap is, right? Nobody can predict the absolute bottom. That, if anybody says that, they're a fool. But I think we're pretty close. I think we are pretty close to the bottom. And the way I would play Gap is to buy, I wouldn't go all out right now. I would buy a certain amount from the total amount that I want. So let's just imagine that I wanted 100 shares of Gap. I would buy 50 right now. And then if it falls within the next 1 month, because after that we start holidays and all that stuff, so I don't think it's going to fall. But if it falls within the next 1 month, then I would buy the rest of the 50 shares, right? If not, oh well, then I just stay with the 50 shares that I had and still be happy that it went up, right? So that's that. I think that it is a good swing trade. Let me know in the comment section below. I wish you guys all the best and take care.